Hey guys, what's up? It's Dom Trades, and today we're going to be going through how to trade the lunchtime macro on the Nasdaq or on the ES. Currently, I am leveraging the strat in this current trade, so I'm going to be kind of talking about my entry here, and then we'll talk about the core 4 to 5 concepts of properly trading the lunchtime macro. It's one of my favorite macros, and if the conditions are right, it's going to play out well. But you can see here, today is May the 26th of 2026. We're at all-time highs. NQ just printed above 3,000, and it's, believe it or not, it's a bit anxiety driving to short the market at all-time highs. But you can see here we were printing since 9:30 all the way to just before the 10:50 to 11:10 macro. You can see there I've denoted that fair value gap. So number one, it's a fair value gap around the lunchtime macro. Number two, it's the very first fair value gap that forms after that first hour dealing range. So from 9:30 to 10:30. That's a very important fair value gap. ICT talked about it a couple of weeks ago, and I employed it and I like it, and I'm using it ever since. It kind of gives me a bias, a grounding on how to take trades off of it. So you can see here, we created it to the upside. We broke above that 1 hour dealing range, and then we collapsed below it. It turned into an inversion fair value gap where you can see the bodies are struggling to get to the upper half of that fair value gap. And that was basically kind of criteria number one. Reversal around a key fair value gap at a key time. So remember guys, first time, then price. So I went in a short. I risked around $500 here, which is roughly my 1% of my 150K account on Top Step and on my futures family. And you can see here, you know, price went up into those two fair value gaps. One's in blue, and that red one, that pink one that I created, that one is ultimately just a displacement lower. Again, it should be acting as resistance, so price gets down there. Now, going into this trade, my mind's thinking the moment we hit those two relative equal lows that I've marked right there around 30.050, that might be the low. That might be the retracement, and price might be going higher. So I made a note to myself there. Once we tag that level, I'm going as close to break even as I possibly can, because I just don't want this reversing against me and price continuing to print higher. Again, all-time high trading, assume, if you're new to trading, assume it's going to keep printing up. That's the easiest way to do it. I've definitely had some pain trying to short all-time highs in the past, and I've learned my lesson. So here, you can see here, my break is at stop even, and I'm looking on how these key and well-respected fair value gaps on the upside of the trend are being respected to the downside. So you can see right before we broke below it, you can see 1, 2, 3, 4. There's 5 attempts from a wick perspective to break it below, and finally we break below. Price goes back up, touches that well-respected fair value gap, and it drops lower. Now I'm currently partial out 20% here. I like that we got to this imbalance halfway between my target and where we're at right now. And I'm currently watching to see what price is doing. If it wants to dig into that fair value gap and break it, or if it wants to find its bottom and keep printing higher. Again, all-time high trading, it gets a bit tricky. But while we kind of wait for price to do its thing, let me drop a couple of scenarios and key tips on trading the lunchtime macro. So number one, the market since the open has to be trending generally in one direction up until 10:30 to 11:30. So that we have here. Number two, we're waiting for a key level or a key fair value gap to be inversed and for an easy level to hit, which is usually the first low after 10 o'clock. But again, as you can see, the first low is usually the easiest low. That's where I went to break even. But again, there's that triple bottom there that my eye is really drawn to. So I'm most likely thinking there's probably sell stops there just nested below that level there. So that's my final terminus for the trade if it gets there. So that's scenario 2. And scenario 3, again, trading within macros always helps. And you can see here, I got within the 10:50 to 11:10 macro. So again, so we saw a bounce off of that last fair value gap there to the upside. It went into another fair value gap and into a bearish order block and then collapsed lower. Right now, price officially closed below that fair value gap, and I'm seeing if it wants to use that bullish fair value gap as an inversion and continue to push price lower. I do have my stop loss nested just above that bearish order block there. Again, I wouldn't want to see it. I'm fairly aggressive here with my stop loss management just because we're at all-time high trading. Again, it's not, guys, it's not easy to short the market at all-time highs, but through proper risk management you can definitely do it with the right amount of years of experience behind you and the right technicals. So again, I'm watching to see how this bearish order block here gets represented. You can see the bodies are not getting to mean threshold. They're staying below mean threshold of that bearish order block that I've marked there. And price right now is attempting to break again below that fair value gap, reclaiming it as an IFEG. You can see here quite an aggressive push to the downside. I've pushed my stop loss just above those up close candles, which are going to act as another bearish order block. And I took another partial here right below these levels. And as of right now, I am 50% out of my position. And I'm currently seeing how price is going to be using this inversion here. Again, that bearish order block plus that fair value gap that we're using that was used to the upside, we do want to see it being used to the downside. We have a nice little smooth low that just created over the last 3 candles here, which I'm liking. I am going to anticipate that this is going to get drawn to. And again, through partialing out, this allows you to keep your composure. If you get stopped out, it's not like you go to break even for the trade. You come out with a bit of money because NQ should pay you for all this work. So managing your stop loss and partialing out, it really helps your psyche. It removes anxiety and stress, and it really helps you maintain your composure through long 30 to 50 minute trades. So you can see here, price again closed above that red fair value gap that we had there. Again, I was maybe losing a bit of confidence there as this is not prime PA. It did push into that initial bearish order block, and then it dropped again once below. Again, from here, I do not want to see it go back up. I do want to see it drop from here. And right below us, we have that 3,000 level. And again, it's a psychological level. And by 3,000, I mean 30,000, sorry. And it's a psychological level. And there's a chance that that might be the low where price hits that level and just bounces up and starts printing higher highs. Again, I don't know that. It might go to the lows, it might not. It's a game of probability. And really, price can do whatever it wants. All we can do is manage the target, manage your stop loss, and manage your entry. Everything else, you can't control it. And all we can do is just manage those 3 parameters. Nice little push to the downside. We just tagged the 30,000 level. I partialed out another 25%. So as of right now, I'm very calm, cool, and collect. 75% of my position is currently, parked. I think it's roughly, 1.2 to 1.6 thousand. I'll show you guys a screenshot after of my top step broker. And again, I've moved my stop loss to above that last little cluster of bullish candles or up close candles. We do not want to see that break to the upside. If it does, the trend might be reversing because that's going to be the market structure shift after it touched the 30,000 level. Again, just trying to play out the possible possibilities that NQ wants to possibly execute. So you can see here, and this is actually really interesting, that fair value gap with that bearish order block there, that's my last line of defense. Once price gets there, game over for me. I'm out of my trade. And to be honest, at that point, I'm not going to care what NQ does. You can see on that last push up there, look at where that wick stopped. It stopped dead in the tracks of the mean threshold of that red fair value gap that we have there on the screen. And it's just interesting how price just stops at these random levels and continues moving. So again, I was thinking of moving my stop loss below that most recent high, but I just did want to use that fair value gap as my last line of defense there. So again, overall, inversion fair value gap plus that higher bearish order block is ultimately my line in the sand. And if that gets targeted, then I'm wrong. And I'm going to come out with just over, 1,000, 1,500. And I am okay with that. And here I'm just basically typing out what I just basically said. We can't really tell price what to do. We can just dance around it very strategically and make sure. I dropped a couple of magnets again. Sometimes this helps. Price just starts being pulled towards. And again, at this point, price is getting a bit messy where you can see that it's still trending downwards, but it's moving sideways. And it's because of this 30,000 level. Buyers and sellers, or the algorithm, depends on how you want to look at it. There's just a lot of noise here. And at this point, for me, it was a 50-50. I'm like, it's either going to blast up from here or it's going to blast down. So I was happy with my stop loss. We've partialed out 75% here. And at this point, it's a waiting game. Not getting too technical in these candles. Again, I'm watching price right now, real time, reach up into that IFVG that we're trading into. And this is going to be pretty interesting as well. Price is going to, again, stop dead at its tracks at the mean threshold of that fair value gap and drop once again. So seeing this reaction gave me a bit more confidence that maybe it's not a 50-50 anymore. Maybe it's more weighted to the downside, and I'm liking this. But at this point, I wouldn't want to see it start printing in the upper half of that fair value gap, as depending on where candles print based on fair value gaps, that's the relative strength of price and how well respected those fair value gaps are. So at this point, waiting. And again, if you're trying to get technical here on seeing what these candles are doing, again, there's not much here. Maybe if you dive down into the 15-second, you might see a bit more data, but this is technically, low-level consolidation right before its final target. I'm liking this push lower once again. And right now, to be honest, I'm hoping that the 30,000 level closes to the downside and just rushes to that sell-side liquidity. Again, it's very smooth. And again, at this point, what was going through my mind is I would be shocked if NQ just blast back up. And again, NQ can do that. It surprised me many times in the past. And there you go, guys. I'll do a voiceover, but check its head. And here's a screenshot of my broker. So fading all-time highs. Call me ICT. But yeah, that's that, guys. Little lunchtime macro. Take care, guys. Trade safe, and see you guys in the live streams.